Hello everyone, it's the last video of 2023. Breaking news, the US stock market rose for 8 straight weeks. This is the longest weekly winning streak since 2017, pushing S&P 500 to a level where it is less than 1% from its record all-time high. The latest rally came after yet another positive inflation data. It seems like things are looking great for the Federal Reserve as well as the investors. And in case you are not aware, last Friday marked the start of the so-called Santa Claus rally period. So, is the Santa really in town? Will this rally continue into the new year? There will not be any video next week, so I will try to cover as much as I can this week. Therefore, please stay tuned throughout the video. Last week was an interesting week because on Wednesday there was an abrupt sell-off in the market where all three major indexes experienced their worst daily sell-off in 3 months. This left investors scratching their heads as they searched high and low for bad news or catalysts that triggered the sell-off. Some analysts or experts attributed the selling pressure to the 0-day to expiration options, while others blamed the low liquidity and wider bid-ask spread due to holiday season. But regardless of the reason, the very next day the market rebounded as if nothing had happened. It's just amazing and interesting. And then on Friday, the rally continued, and this rally was likely because we have yet another cooler inflation data. The Federal Reserve's favorite inflation gauge, aka PCE, came in less than expected. The core PCE index rose only 0.1% in November and gained 3.2% from last year. These numbers are kind of in line with expectations, as economists anticipated a monthly increase of 0.1% and yearly increase of 3.3%. In fact, the latter was cooler than expected. More importantly, the report has indicated that annualized rate of PCE inflation is at 2% over the last 6 months and core inflation is down to 1.9%. This data point is important as the Fed pays close attention to them to make sure that the inflation is truly falling or settling down. To summarize, the latest report gives investors another boost to their hope of a rate cut in the first half of 2024. Alright, we have a light week ahead as the US stock market will be closed on Monday for Christmas. This means volume will be low and volatility will be high. Just to bring back last Wednesday's sell-off, yes, it has proven to be just a day worth of scare rather than a horror show. With lower volume and less trading activities this week, investors must be mentally prepared to see similar big movements in the market this week. It may not be towards the downside because huge swings work in both directions. Also, in case you're not aware, we have officially entered the so-called Santa Claus rally period, which refers to the final 5 trading days of the year and the first 2 days of the new year, where stocks tend to rise. So last Friday marked the official start of this period, and it will wrap up on 3rd January Wednesday. Just so you know, historically, the Santa Claus rally has an almost 80% success rate, with just 2 in the past 10 years seeing S&P 500 decline during this period. Also, stocks have generally gained an average of 1.3% during the Santa rally since 1950, higher than any other consecutive 7-day trading period. Okay, before you get all too excited, I just wanted to caveat that there is no sure thing in the stock market, and they always say past performance is no guarantee of future results. Therefore, it is okay to factor in all these statistics when you do your own homework. And then you have to decide what is the best way to trade or invest this and next week. If not, just take these 2 weeks off and enjoy the holidays. Personally, I wouldn't go short or take short-term bearish trades this week. If I want to open a bearish trade for whichever reason, say a covered call, it will be for a longer time frame. Let's now move over to the technical analysis segment. So in my last video, I shared that if the level 467 gets tested and holds, then the chance of hitting 475 is decent. And there we had it, 467 held and SPY hit 475. Come this week or maybe even next week, if the bullish momentum continues, I think SPY has a decent chance to charge towards 480, which is near to the top end of the green uptrend channel and creating another new all-time high in the process. But do take note that the prerequisite for this to happen is that SPY needs to close above that resistance level of 475. Let's say if SPY really touches 480 this or next week, I just wanna bring back what I have shared in my last video. That is, when SPY hit the top end of this uptrend channel on the previous 3 occasions, it fell quite substantially. Therefore, I would say that's a pivotal point to watch. I personally wouldn't enter any trade when it is at that particular level. I will wait for SPY to pick its new direction. If it gets rejected, then one can consider a bearish trade. And if it breaks out of the green uptrend channel, one can consider a bullish trade. On the other hand, if SPY cannot even break free from 475 and buyers went on holidays, watch for 467 again. SPY has been floating above this level over the last 7 trading days and tested it on 3 occasions. This level has to hold if we want to see a center rally. But somehow, if it doesn't hold, would you believe me if I say SPY will fall back to 450's range? Okay, don't believe my words blindly, okay? It's all about probability, and try to learn to watch the stock movement. Anyway, in the 450's range, 456 will be the first decent support. This is one key level to watch. If it breaks, you see that gap over there, and the 50 moving average over there? The range is between 439 and 444. Yes, if 456 breaks, that will be the target for the bears. My honest opinion is, it is quite unlikely that SPY will hit that level from now till first week of January. Moving over to Apple's chart. Well, Apple is finally taking a break after its breakout from the bullish flag. So in my last video, I shared that there is a decent chance for Apple to hit 200 if we can stay above 197. As you can see from the chart, Apple lost 197 on Monday and it couldn't claim it till the end of the week. That's a slight bearish sign. Here's something interesting to share. What makes Apple more bearish is these 3 red candles. They are called 3 black crows. This is considered as a powerful bearish pattern as the bears overtook the bulls for 3 consecutive trading sessions. Basically, the bull started the session with the price opening slightly higher than the previous close, but the price is pushed lower throughout the session as the bulls get overwhelmed by the bears. Please give this video a like if you have learned something new. Meanwhile, in the near term, specifically this week, whether the bearish momentum continues, it could well depend on Biden's decision on the US ban on Apple Watch. If you don't know what's happening, just do a quick Google search on the keywords Apple Watch and Biden. Anyway, if the news remains negative, then the first support area to watch is around 189 to 191. This area is formed by the first Fibonacci retracement level and September 2023's high. If this support zone breaks, honestly I don't see much support all the way to 182. Sure, I can see that there is this 50 moving average above 182, specifically at 185. But given Apple has been on this parabolic run-up, if the market wants to flush, I don't think 185 can hold. Alright, is it all doom and gloom for Apple? Do we short Apple this week? Okay, relax, don't be too excited if you are a bear. Again, we need to watch the 189 to 191 support area. If it gets protected by the bulls, then Apple could continue to consolidate around this range before going higher. Despite the bearish 3 black crows pattern, the saving grace is that the volume is declining, which means we don't have a lot of participants in this latest sell-off. That's good, right? It means not a lot of people are disposing Apple shares. But it could also be a case of a few but big players selling off the stock right now. In fact, that's the tricky thing actually, because don't forget, we have a light week ahead. So we only need that few big institutions to come in to buy or sell, the stock can move substantially. But if you are good at trading, this could spell good news to you because you can milk some nice premiums with the higher volatility. Hopping over to Tesla's chart, Tesla is looking slightly bullish in the short term as it broke out of the purple downtrend line. Not just that, it also retraced and tested the line twice and bounced up. Okay, I know that big fat red candle on last Wednesday may look a little scary, but the saving grace is that it bounced back up and at the same time, that big red day has cooled off the RSI indicator such that it became not so overbought, therefore giving it more room to go up. If the momentum continues, Tesla could be on its way to the 260s range. In order for that to happen, any retracement or pullback by Tesla needs to see it stays above the purple downtrend line, followed by the green uptrend line. If both trend lines don't get breached, Tesla could slowly grind up to 260s range. Next, if the bulls can take out the recent high of 268, I think we can say that there is a high probability for Tesla to charge towards the gap between 280 to 289. But for Tesla to jump that 12% or more, we need a bigger catalyst, and I think that would be the announcement of its delivery numbers in early January. However, just a word of caution, such catalysts can make a stock swing in either direction. So it's almost like either Tesla jump to 280s or we drop to 220s. Anyway, appreciation time again. A huge thank you to these viewers who have bought me a super thanks. Huge shout out to Amy who contributed 3 times, including via the coffee page. With the latest support from you guys, the amount that I have received after deducting YouTube's commission is about $15 right now. As shared in my previous videos, I will need 150 Singapore dollars to cash out. That works out to be about $113. So $100 more to go before I can cash out my first ever paycheck. So do keep the support coming in, but of course within your financial means, okay? If not, the free method of supporting this channel is simply by tapping the like and subscribe buttons, and also share it with your friends. Help me grow the channel, right? Okay, back to business. Let's say the market doesn't like the delivery numbers in early January and it triggers a sell-off. Once again, watch that 2 trend lines. Maybe you can also throw in the 61.8 Fibonacci level at 240. If all these 3 support levels break, then I think it's time to stay alert. I will be on my toes if we break that short-term strong support level at 231. As you can see, this level held for the last 1 month, so if it breaks, it speaks a lot of volume on the bearish momentum. Breaking 231 also means breaking the 50 moving average, which currently sits at around 232. The last line of defense is around 222 to 227, formed by the 200 moving average, the gap, and the 38.2 Fibonacci level. I believe Tesla stock will be very volatile when the announcement of delivery numbers is out, so do pay attention to all these key support and resistance levels. Lastly, we have Google. Wow, it went up by about 6.5% last week, and more importantly, it has broken out of the consolidation zone between 127 to 139 area. It's like it's finally doing something different. Otherwise, every week I am repeating the same thing, that Google is floating within this range of 127 to 139. Also, I realized I missed out on a very important pattern. There was this bullish inverse head and shoulder pattern formed on the chart. How did I miss it? So sorry for that, man. Should have caught it earlier and share with the viewers. My bad for that. Anyway, here's something to watch. We are at a pivotal level. This is the neckline of the inverse head and shoulder pattern. If it breaks, then it's a so-called breakout of the pattern, and we will have a high chance for Google to charge even higher, and the level that we are talking about could potentially be 150 at least. But before bulls get all too excited, I would like to highlight that back in October, Google also hit 141 level, but it turned out to be just a peekaboo or touch and go situation, because shortly after touching 141, Google fell back down all the way to 120's range. Therefore, this week is crucial for Google in my opinion. We need Google to stay above 140, and if possible, build a base or consolidation zone between 140 to 145. Then, we could potentially hit 150 in the first 2 months of 2024. But that will also depend on its earnings, which is roughly at the end of January. Anyway, you get the gist. We need Google to stay above 140 for more than a week to call it bullish. If we have a breakout there, I will be looking at selling cash secure put for Google. Not financial advice, okay? On the other hand, if it can't stay above 140, then this is called a false breakout, just like back in October 2023. And it may also potentially create a bearish double top pattern with 127 as the key support line. And coincidentally, 127 is also the bottom of this consolidation zone. So again, 127 is very important to watch in terms of support level. But before hitting that level, I do think Google has a decent support in the 133 level. If only this breaks, then we talk more about the bearish thesis, alright? Alright, let's now cover my options trades. Last Friday, 22nd December, I opened a new trade, which is a cash secure put on Tesla with a strike price of 205. The expiration date is 2nd February 2024. Again, I will have to censor the premium so that viewers do not follow my trade blindly. Okay, the rationale behind this trade is, as shared earlier in the technical analysis segment, Tesla is looking bullish in the short term as it broke out of the downtrend line and bounced up twice after it retraced and retested the trend line. But there are two potential threats to this trade. The first one is the announcement of Tesla's delivery numbers in early January, and the second one is none other than their earnings report, which usually takes place in end January. These two events could cause Tesla stock to swing wildly in either direction. Therefore, to prepare for the scenario where it swings downwards, I have selected a strike price that offers me a decent buffer. A look at the chart shows that Tesla needs to break multiple important support levels before my 205 strike price gets breached. Those levels are purple downtrend line, green uptrend line, the all-important 61.8 Fibonacci level at 240, 50 moving average at 232, a short-term strong support at 231, and 200 moving average at 227. That's 6 big support levels in total. But that being said, for Tesla to drop from the current level to below 200 moving average, say 225, it's only about 11% drop. What's 11% to Tesla, man? Look at last Wednesday. Just one day alone, it can drop about 5%. The point here is always be mentally prepared for the stock to move against your trade. Anyway, if Tesla indeed drops to my strike price, there's nothing to be worried about, because I can either roll my option or I can accept assignment of 100 Tesla shares and then quickly sell a covered call, aka the options wheel strategy. Don't know what's that? Check out my video link at the top. The next trade to update is this covered call on Tesla that expired last Friday 22nd December. The strike price was 290. This contract was sold on 17 November. At that point, Tesla has displayed more bearish signals than bullish signals. Not just that, from the point where I sold the contract, Tesla has already rose close to 10% in that week, and it has to further rally another 23% to breach my 290 strike price. Not saying it's not possible, but stock doesn't go up in one straight line. It moves in the zigzag pattern and it takes time. Yes, time, that's my favorite. By selling options, I make time work for me, aka time decay. Anyway, more information on this trade can be found in the video link at the top. So for viewers who are interested in knowing my thought process, do check it out. So after I sold the covered call, Tesla did not fall much as I thought it would. In fact, it held above 231 pretty nicely and then traded sideways for one full month. And that's the beauty of selling options. You don't need to be absolutely right, you just need to be approximately right. Alright, the next time when you hear from me, it will be 2024 already. So let's share a bit more thoughts in this video and to wrap up 2023. So 2023 has been an amazing year as my portfolio is up about 65%. But this does not mean that I am a genius or good at investing, because prior to this year my portfolio was down I think about 30+%, and if we were to dive in deeper, my portfolio is very heavy on the Magnificent 7. To be even more specific, I hold 6 out of Mag 7 stocks. I only do not own Amazon. I actually did a video on this stock some time ago, and I am glad that I picked up quite a fair bit of these shares during the bear market. And this year it all paid off. They basically rallied like mad, as you can see from the list below. The one that carries the most weightage in my portfolio is none other than Tesla, and it's up more than 130% year to date. It's just amazing. Let me just quickly show you this chart. I was busy picking up Tesla shares back in October 2022 all the way till January 2023 when Tesla was on its way down to $101. And coincidentally, October 2022 was the bottom of the bear market. Note the word coincidentally because I really don't want to claim any credit for that. If anything, it's really luck that I managed to pick the so-called bottom. But it's not luck that I bought shares when there was a lot of fear in the market. This is actually the message that I want to bring across. In fact, I have been preaching this for the longest time. It does sound simple, but it is tough to execute for many investors. I record at that point, people were calling for Tesla to hit towards $80, $60. That was the time I was aggressively selling put options too. Well, those were the days where the option premiums were really juicy. Overall, I must say it was a good year for long-term buy and hold investors, and it was a tough year to bet against stocks, especially the short sellers. According to Yahoo Finance and S3 Partners, short sellers on Wall Street have lost nearly $178 billion this year. I think there were too many people entering this year thinking that it will be a bad year, but somehow the market did the opposite, and then it created a snowball effect where retail investors or even institutions started to feel the FOMO as they didn't want to underperform the market, and therefore they started to pour money into the stock market. When this happens, the short sellers were being forced to close out their positions by buying back the shares, thus sending the shares even higher. They basically got squeezed. Alright, come 2024, the general expectation of the market is soft landing, falling inflation, falling bond yields, and rate cuts. These are all positive catalysts for the stock market. To add on to this, the market rally has recently broadened out to many other sectors, including the small cap stocks. Last Friday, the small cap Russell 2000 gained 0.8%, posting its 6th straight positive week. But here's the thing, back in 2022, the market was calling for doom and gloom in 2023, yet the market rallied, with S&P 500 up more than 20% year to date. So now, as we approach the end of 2023, many investors are hopeful for a solid 2024. Will the market teach us a lesson again to show that they tend to go opposite of what the majority thinks? Okay, here's my take. The market rally looks strong and there are good reasons for us to be bullish entering 2024. As shared in my last 2 or 3 videos, I think there is a chance for S&P 500 to push towards all-time high by early January. Beyond that, it's hard to predict or anticipate, so to speak. But I am expecting a generally positive 2024. However, it is unlikely to be as crazy as this year. That being said, things change along the way, so do subscribe to my channel to get the latest updates of my thoughts and views. Meanwhile, as usual, I am going to be the broken recorder here again to warn investors against getting too complacent. Technical wise, the market still looks extended, especially the tech industry or Nasdaq. But the thing is, overextended market can remain overextended. All they need to do is to have 1 or 2 big red days or multiple small red days to cool off the indicators before going higher, and this has been the case recently. So I wouldn't be surprised if it continues like this till early January. Okay, but come mid-January and beyond, I think that's the time I will be a little more cautious, just a little. To highlight, the market is in the extreme greed zone based on CNN's Fear and Greed Index. So if we have a center rally this year, the extreme greed level will continue to rise, and when it goes higher, the chance of a bigger pullback naturally will increase as well. Again, I would like to emphasize that this is not a call or prediction for a pullback. The pullback will come. I repeat, the pullback will come. To me, a significant pullback is a matter of when, not a matter of if. But does it mean we should then stay out of the market until that bigger pullback comes? Nah, because what if it doesn't come? Then you will lose out on lots of gains. Therefore, for long-term investors, the wisest move to make in 2024, or in any given year for that matter, is to pick up shares in tranches. At least in my opinion. But this doesn't mean you start pumping all your money in to chase this FOMO rally. As shared, the market is clearly overextended. Perhaps you can try dipping your toes in when you see some red days. Just to be honest with you, this is what I have done over the last few months, picking up a few shares here and there, just not as many as compared to earlier half of the year or last year. And the plan is I will continue to do that if the rally extends into 2024. I will only be more aggressive if we see a bigger pullback along the way, which I will update in my videos. Alright, if you have stayed to this portion of the video, I thought to just also use this chance to thank those who have supported my channel, be it by liking or subscribing or sharing or even donating and purchasing super thanks. I really appreciate your kind gestures. I will continue to produce weekly videos as long as I can, till I don't know when. If ever there is a stop or pause to this channel for whichever reasons, I will definitely keep you all updated. Honestly, I don't do this to earn money, it's really a side hobby to me. But in the near term, I don't think this channel will stop. So yep, I will see you again in 2024. Have a blessed Christmas and wishing you and your family a new year filled with love, laughter and great health. All these are more important than wealth. Enjoy your holidays. Thank you.